We talked about the volatility contraction pattern previously. So until here, everything looks great. Okay, so it's pending a breakout. So this bar right here is actually the change of character bar. So we talk about this, the change of character, and also last week we also talked about the pivot level. This is the line 75.40, just based on the hourly time frame, and this level actually works out really well. Let's just look at the hourly time frame, and we mentioned 75.40. That's purely just based on the swing high level back here, and as long as this minor resistance level or the axis line, axis level, provided as a strong resistance level for the price, and if it just still struggle to come in above, this is going to be a bearish view with a downwards movement heading to 7400, okay, yet to touch, and also 7300. So right now this axis level 7400 proves it once again. That's on Tuesday, okay, Monday, Tuesday, okay, so Tuesday is here. So last week we talked about this, and it failed to actually commit above right after this breakout, and followed by another attempt to break and commit above, but we could see quite a lot of the interaction and also rejection, and fail to commit above to stay above, and eventually just break below 7500. So that proves that supply is showing up right at this level. So the supplies came from here, so rejection tail previously, and also we have here some form of the failure to commit above, and also here as well. So in short, as long as it's still below this level, the swing is down. And if you break below 7500, just like here, and it could easily test 7400, which was somewhere around here. That's also based on the previous swing low level. Okay, so look at the daily chart right here. 74 or close to 7400, 7420, we have bit of the demand show up. Okay, demand tail showing up. That's from last Thursday, so a bit of the demand showing up last Thursday. Friday, attempt to rally up, but look at where it stopped. That's the rejection tail again. And Monday, yesterday, we have attempt to rally, but turns out to be another rejection tail. So 7500 now clearly become a resistance level. So that is the zone that has been tested and became a resistance zone. And next level will be somewhere around here. That will be some 7400 level based on the previous swing low level. And so far, the demands reacted a little bit, not that great. We have sort of the demand tail shown up in these 4 candles, okay, maybe 3 candles. So this is the candles that's currently still unfolding for today. The point is, this is the resistance level, the 7500 level. Once showing this breakdown bar has been tested first time, second time, and both showing rejection tail, and this the bar 2 actually closed a bit low, so 74.50, and the spread actually from 75.24 all the way to 74.50. So this is quite a bearish sign, okay, at least for short term. And the swing at the moment is pointing down. Next support level 7400, or you can extend it a bit to the demand tail. So here's a demand tail somewhere around 7440 all the way to about 7400. That is the zone that's the demand attempt to defend. And once if it breaks below, committed below 7400, it could easily just drive it to 7300 level, which is still the swing low level. And this is a much more meaningful level. And this is where the serious demand should show up and should defend this level. And that could just extend it to 7250 to 7300. So that is a zone that's the bull need to defend itself. Okay, so even if it touch that, breaks down, break below 7400, and then followed by 7300, this is still within the sideways trading range. Okay, so break down 7400, go to 7300, and to the low about 7250. So one thing that I would like to see if it shows up for a quick flash to the downside, so there's a bearish moment, is to test of the previous swing low, or even just a spring, so a temporary commitment below 7250, followed by go back in, okay, and then to kickstart a rally. So hopefully this should be a springboard to jumpstart the sign of strength rally and to flip it to the bull sign, okay, or flip it to the upswing at least. So not sure whether this is going to be a sign of strength rally, but at least this should be a oversold rally, okay. So if you really just break down, break below these two key levels, 7400 and also 7300, spring it, fake breakdown should kickstart the relief rally or a technical rally. Okay, that should be a much more strong rebound. So right now, things since the breakdown happened, or even since this portion pending a breakout to the upside, and the semiconductor or all the AI infrastructure hardware team is not looking great and is still under a lot of the selling pressure. So if we get another flash or the final flash, hopefully could just trigger some short covering and to turn it to the rally or the relief rally to the upside. So this is something that I am looking forward, because at this point, even if it attempt to reverse go up, that should met with quite a lot of the overhead resistance. For example, this axis zone, the resistance zone between 7500 to 7540. Okay, and this is still yet to resolve itself. So in fact, I would like to see at least some form of the short covering, whether it's this level 7400 or a much more meaningful level at about 7250 to 7300. So once if it just have a fake breakdown, a spring, it should trigger some form of the short sellers to commit to the downside. I mean the late comer for short selling, and then become a short covering and to go up. So this will be a lot of the liquidity to drive it to the opposite side. But until then, the swing is down. Downwards pressure is still building up with consistent volume. So not excessively high volume per se, but this is certainly dominating. So Jim say historically August, October has been difficult periods for for the US markets. Do you think we could see a significant drop during that period this year? 50% or 78% of the 2026 gain of 1 to 9. Okay. Well, right now this is quite a significant 50% of the 2026 gain. Well, for 2026 gain, let's say here. So if we use let's say, what can we use? Fib retracement, 50%. Well, a 50% drop, that could be 7,000. That will be quite a damage, to be honest. If you want to have a drop to about 50% to 7,000, that will be a break below this level. Okay, so like I say, at the moment the swing is down. First level, this is really minor level, 7400. You could easily just touch it the next candle, next day. And this is a much more meaningful level where we really have some strong demand come in. So that's why I expect the bull should really defend 7300. So at least we won't have a drop straight, just break below 7300. So if we really want to have some commitment below, at least it should show the intent. A breakdown, attempt to break below, the demand come in, buyers come in to defend the level and attempt to rally up, but the rally become relatively weak. So weak rally should show up and then eventually just turn down, break down. That should fulfill this 7,000 level. So at least you should know with this kind of the telltale sign, this is under the normal price action. However, if we really have some black swan event, something that we couldn't think of at the moment, the war is still ongoing, so wouldn't be the war, could be something else. So that should be, there must be some catalyst if it's really going to be that bearish. So if it really breaks below 7300, we need to assess the structure again, and we need to judge whether it's going to be a localized distribution from this structure. Because if we're going to get a distribution structure out from this trading range, that will be a lot more worse. So if it breaks down here and with increasing of the supply and getting more volatile movement, big candles, big bearish candles, very weak rally, and eventually it should probably just break below 7,000 and also beyond as well. So that will become a major damage to the structure. So by that time, it will become another complex structure to be like, got a phase C. This is a sign of strength rally, and this turned out to become a distribution top. So that should just drive the price back below this trading range, and this become another complex big structure. So from 6,500 and all the way to about 7,600, but that's really too far away. So until then, I would like to see a bullish case, which is a touch of 7,300 or 7,250, followed by a bounce. Means that the big structure is still valid and intact. We still have a sign of strength rally, and this is a potential reaccumulation. So it's still unfolding. But if we get really, like I say, the bearish characteristics, means bearish candles, increasing spread, acceleration to the downside, increasing of the volume, then we need to be very careful and watch out for this structure to turn to a distribution top. So if it materializes, that will be quite a damage. But so far, I still view this as a reaccumulation structure, despite probably some of you will argue that a lot of the stocks drop like 50%, 60%, but that is really just stocks that went parabolic previously, and a drop of the 30% to 50% is still probably time for them to build up their own structure. So right now, we still yet to jump to a conclusion that this is a distribution top. So until we have more evidence, I will treat this as a accumulation structure, because this is what the chart is telling us at the moment. A change of character shown up here. This is a potential trading range, and so far supply has been decreasing, and at best this is still phase B, means testing structure, testing of the support, testing of the resistance. So it could be a prolonged trading range. So yeah, I don't think it will wipe out the majority of the gain in 2026, but it will be volatile, because right now I do think that the market is quite tough at the moment. Definitely not the easy money environment, and you could just view the current market as relatively bearish, although you could still find some selective stocks to trade. But because of the choppy market environment and also the rotation, we don't really have a strong relative strength group. So that will become quite challenging and also harder to trade as well, because without a outperforming group, majority of them is just some random stocks. At best, right now the software group is still not too bad, like the cybersecurity group, but it's losing strength, and it's probably will take some time to consolidate. So best thing to do right now is to be patient and to build up the watch list. And if you really want to trade, then be very conservative and use a relatively tight stop, because I still yet to find a strong group. Right now, healthcare is strong, finance is also strong, but this is really not a group that we want to see during a strong bull market. So healthcare by default is a defensive group, consumer is also defensive group, finance, well, probably that is the only group that is still showing some resiliency, still outperforming. So I believe that you could still find a few setups in the finance group, which we also going to talk about the setups shortly. Some of them are from healthcare, some of them are from the finance group. But right now, from the market alone, this S&P 500 is still looking healthy. So, but that is purely just on this index itself.